Welcome back to the deep dive. You're here because, well, you know that keeping up is more than a full-time job, and you're looking for that shortcut to being genuinely well-informed.
Exactly.
So that's what we do. We take this mountain of information, in this case, it's a really critical AI news digest, and some insights pointing towards the upcoming Gartner Data and Analytics Summit in 2026, and we boil it all down.
We find the signal in the noise.
We find the signal.
Yeah.
And our mission today is to give you what feels like an operational playbook for what's coming next. This isn't theory. We're talking about the immediate systemic changes that are coming from one single, really astonishing data point.
A data point that changes everything for any organization. I mean, big or small.
Okay, so let's unpack this right away.
Yeah.
Because this projection, it basically defines the next 2 years of business. The research is saying that by the year 2027,
Which is, that's stunningly soon.
it's right around the corner. By 2027, a colossal 50%, I mean half, of all business decisions are projected to be either augmented or fully automated by AI agents.
50%.
50, that's not, incremental progress. That's a complete restructuring of how business gets done.
And that number, that 50%, it's more than just a forecast.
Yeah.
I think it's really a declaration of a new reality.
Okay.
The analysis we've been looking at, it really stresses the gravity of that statistic.
Right.
It's not being labeled as just another trend. The data, the source material, it's explicitly calling this a fundamental shift, a shift in how organizations operate, how they make strategic decisions, how they even think about allocating resources. It's a tipping point.
A hard tipping point.
Yeah.
Right.
So for leaders, for knowledge workers, really for anyone trying to build a career right now, this demands, an immediate focused look. We're basically watching AI go from being a tool for efficiency,
Like a better calculator.
exactly a better calculator, to becoming an active driving partner in the most important strategic choices a company makes.
Okay, I agree the implication is massive. But I have to, challenge the premise a little bit.
Right.
That 50% projection, it feels massively aggressive, especially for these huge regulated companies that, they move at a glacial pace.
Yeah.
Where does the analysis justify that kind of velocity? Are we really talking about high-stakes, board-level decisions here? Or is this mostly just, optimizing things like where to move pallets in a warehouse?
That's a crucial question, and I think the answer is in the mechanism. The projection is concrete, right, by 2027. And the speed. The speed implied is precisely why this whole concept of decision intelligence, which we're going to get into, is suddenly so vital.
Good.
If the leading companies are seeing huge successes in their pilot projects right now, today, that success just accelerates the whole market exponentially because of competitive pressure. No one can afford to be left behind.
Understood. So for this deep dive, here's what we're going to do. We're going to define what that 50% threshold actually means. We'll dissect augmentation versus automation, and we'll give you some really practical examples.
The nuts and bolts.
The nuts and bolts. Then we'll get into what this idea of decision intelligence is, this sort of sophisticated framework that AI is now a core part of. And finally, we'll analyze the intense pressure, the brand new requirements being placed on leaders right now, which is really the focus of that 2026 summit.
It's essentially a roadmap for how to stay competitive. The pace of this change means that, preparing for it isn't some future planning exercise you do at an offsite. It's an immediate operational requirement.
Okay, let's start with the timeline and the sheer magnitude of this. We're talking about a projection that hits its mark in, less than 2 years from the time of that 2026 summit.
Yeah, the runway is incredibly short.
When you think about most major corporations, they need 18 to 24 months just to complete a complex internal software migration. The idea that they have to fundamentally change half of their decision-making processes in that same window it's just mind-boggling to me.
The speed is, as the research puts it, breakneck. And that's the right word for it. If the leading firms, the innovators, are already far down this road of integrating AI into their core decision architecture, it creates this massive vacuum that laggards are just going to get pulled into.
Or crushed by.
Or crushed by, exactly. And the scope is just as critical. The phrasing is half of all business decisions. That's the highest level takeaway here.
So it's not isolated.
Not at all. The impact isn't limited to one department or, low stakes clerical work. It really does encompass everything, from optimizing your quarterly financial reporting cycles all the way up to the highest level strategic calls.
Like what?
Like deciding which new geographic market to enter, or making a major capital expenditure decision, or completely re-architecting your global supply chain. All of it.
And that broad scope, It necessitates a mechanism for integration, which is where we have to really deconstruct the two big categories that the analysis lays out: augmentation and automation.
Right.
Let's start with augmentation. This seems to be let's say, the safer, more manageable entry point for most companies.
It is. Augmentation is precisely that human-in-the-loop stage. The best way to define it is AI acting as a sophisticated, hyper-efficient co-pilot.
A co-pilot, I like that.
Yeah. The AI's primary value here is processing complexity. It does it at a scale and a speed that is just impossible for a human brain or even a team of human brains.
So what's it doing?
It can chew through petabytes of data, historical data, real-time data. It can identify these hidden correlations that no one would ever see. It can model dozens, maybe hundreds, of possible outcomes in parallel. And then, and this is the key part, it presents the optimal pathways back to the human decision maker.
So this is where we see the immediate value. Let me try an example. If I'm say, a global retailer and I'm deciding on seasonal inventory levels.
Classic complex problem.
Right. Which products do I stock, in which regions, at what price point?
Yeah.
A traditional team, they might take a month to build out maybe 3 complex scenarios.
They're good.
If they're good, yeah.
Yeah.
But augmented decision-making means an AI agent can run, tens of thousands of simulations?
Mm-hmm.
It can factor in all these variables: interest rate shifts, climate events that might impact shipping, what competitors are doing with their pricing, and it does all of that in minutes.
Exactly.
So the AI presents this refined, filtered report back to me. It might say something like, based on 50,000 simulations, increasing your investment in supplier C by 15% gives you the highest probability of an 18% return, despite carrying a 5% higher risk of, say, geopolitical disruption.
And you, the human, are still in charge.
Right. The AI doesn't pull the trigger. I still make the final call.
Yeah.
But it's giving me this radically superior map and compass. It allows the human leader to grapple with those increasingly complex scenarios that the research keeps highlighting.
And that processing of complexity, that is the true game changer in augmentation. I mean, human cognitive capacity, it just hits a ceiling when you're dealing with all these non-linear, dynamically interconnected variables.
You can only hold so much in your head at once.
Precisely. Augmentation effectively extends that ceiling infinitely. It lets the human leader spend their valuable time focused on the truly strategic stuff, the ethical questions, the relational elements of the choice, while all the computational heavy lifting and complex forecasting is handled by the AI.
That makes sense. Institutionally, that feels like a crucial first step.
It is, because the human remains accountable, right?
Yeah.
They retain the final sign-off. So augmentation builds trust within the organization. Companies are essentially stress testing their AI models, but under human supervision.
So they're learning how it thinks.
They're learning how it thinks, and they're refining the parameters, they're refining the governance protocols that they're absolutely going to need before they can even think about moving toward full autonomy.
But that 50% target, it explicitly includes the other half of this equation, the really disruptive element: fully automated decisions.
Mm-hmm.
If augmentation is the co-pilot, then automation is the autonomous vehicle. It's driving itself.
Indeed, and fully automated decisions. These are the scenarios where the AI agent makes the strategic choice, and this is critical. It executes that choice based on predefined parameters and real-time data with no human intervention at all.
So the human role shifts completely.
Completely. The human leadership, they've set the guardrails, they've defined the objectives, the risk thresholds, but the AI is the one driving and executing everything within those boundaries.
This is where that line between technology and management it completely blurs. We're talking about algorithms that don't just recommend a price change on a website.
Yeah.
They implement a dynamic pricing model instantaneously based on competitor moves, website traffic, real-time inventory levels. Or an AI agent that detects a supply chain disruption like a factory closure in Asia, and it automatically reroutes production to another facility.
And not just that, it would renegotiate the logistics contracts on the fly.
And update all the internal fulfillment timelines, all before a human manager has even poured their first cup of coffee.
That's the level we're talking about. And the types of decisions that are going to gravitate towards automation first are, the ones you'd expect. High volume, highly repetitive, incredibly data intensive.
And where speed is everything.
Exactly. Speed and consistency are worth far more than the tiny risk of a minor error. Think about fraud detection, where milliseconds are the difference between catching it and not. Or programmatic media buying in advertising. Or, algorithmic trading executions.
So when we cross that 50% milestone, It means that a massive chunk of existing managerial tasks, I mean, the operational decisions that often define the first, 5 to 10 years of a career in management,
Poof, gone.
they're just taken over. The job description itself shifts dramatically. It moves from making those daily operational choices to
What? Auditing.
monitoring.
Auditing, monitoring, and refining the automated AI agents that are making them. You become a manager of bots.
You know, when I was reading through that analysis, I couldn't help but think about the entire mid-management cohort. We're
Yeah.
essentially talking about automating the very job that defines the corporate ladder.
It's a huge psychological shift.
It's way beyond a software update. It's a career path rewrite for millions of people.
That is exactly right. And this brings us right back to that core statement from the source material. This is more than just a technological upgrade. It is, because it fundamentally challenges our traditional models of liability. If an automated AI decision leads to a really negative outcome, say a massive inventory shortage because of a flawed forecast, or a major contractual breach because of an execution error, who's accountable?
Right. Traditionally, it's pretty clear. You find the person who was negligent, who made the mistake. But here, the error could be so subtle.
It could be something like algorithmic drift, where a perfectly good model just gradually starts to perform suboptimally because the real-world data it's seeing has changed over time.
So who's on the hook? The human who set the initial parameters years ago, the data scientist who first trained the model, the executive who signed off on the whole autonomous system.
Exactly, and you can't figure that out after the fact. The shift to autonomous decision-making, it demands a completely new architecture of accountability from day one. It means organizations have to set up these robust processes for continuous, almost adversarial testing of their AI models.
You're trying to break it on purpose.
You're trying to break it to prevent unforeseen competitive exploitation or, a systemic regulatory failure. This has to be anticipated before 2027 because once the volume of automated decisions hits 50%, trying to retrofit accountability onto that system will be nearly impossible.
So the tipping point isn't just a technical marker.
No, it's an existential governance marker. If you fail to adapt your governance, you're looking at operational paralysis because you'll be drowning in unmanaged risk.
Okay, so the key to solving that risk, that scalability problem, it has to lie in the system's architecture. And this leads us perfectly into the next segment, where the research explicitly says AI is becoming an integral part of decision intelligence.
Right.
We need to clarify this terminology because decision intelligence, or DI, that's a significant leap forward from what most of us know as traditional business intelligence, or BI.
It's a huge leap. BI is fundamentally about reporting. It's about what happened in the past, building dashboards for historical data.
Rearview mirror stuff.
Totally. Advanced analytics might try to take a step forward and explain why it happened, but DI is about creating a structured end-to-end framework for how decisions should be made.
So it's forward-looking.
It's completely forward-looking. It synthesizes data, behavioral science, context, predictive modeling, and critically, it ensures that those decisions are executed effectively and that the outcomes are measured in a closed loop to refine the model for next time.
So when the analysts say AI is becoming integral to this structure, what does that mean in practice?
It means the AI isn't just, supplying some data or running a forecast on the side. It is baked into the decision flow. It's doing the synthesizing, the forecasting, the recommending of action. And in those automated cases, the AI is the action itself.
And that integration, it forces things like data quality and model governance to become core business functions.
Right.
They can't be back office IT tasks anymore.
They absolutely cannot. I think the best way to understand the difference is to look at the foundation required. If AI is integral, if it's the bedrock, then data quality, model governance, lifecycle management, these stop being niche topics for specialists and they become central enterprise-wide strategic concerns.
Because if the AI model itself is faulty, then half of your business choices, that projected 50%, are going to be fundamentally flawed.
And that's a terrifying prospect.
Think about the role of a data architect today versus, say, 5 years ago. They're not just cleaning up data for a quarterly report anymore.
No, their job has been elevated.
They are curating the digital reality upon which half of their company's financial and strategic movements will be based. The stakes for data fidelity have just never, ever been higher.
And that data fidelity, it directly informs what analysts are now calling the organization's algorithmic capital. We have to define this term. It's the new measure of value in a company.
Algorithm capital.
It's the organization's most valuable intellectual property. And it's not just the raw data. It's the proprietary refined machine learning models. It's the clean data pipelines, and it's the governance frameworks that altogether provide a real competitive differentiation.
So leaders now have to manage this new type of capital.
Exactly. They have to manage its depreciation, its maintenance, its defense. If your models are proprietary, highly accurate, and efficiently deployed across 50% of your decisions, that is a massive asset on your balance sheet.
But if they're poorly maintained, if they suffer from that drift we talked about, or if they're easily replicated by a competitor,
Then that capital is rapidly depreciating, and that becomes a core risk that the leadership has to address right now.
in this integration into DI, it links directly to that immense pressure on leaders we keep coming back to. This skill set required at the C-suite level, it has to change completely.
It does.
Leaders have to move beyond just trusting the output, which I think is a common mistake. They have to genuinely understand the limitations, the risk profile, the capabilities of their AI agents. They're now managing this incredibly complex algorithmic capital, not just the traditional human capital they're used to.
And let's talk about the scope of strategic decisions that are being captured here. This is where it gets really real in terms of competitive positioning.
Give me an example.
Okay, take resource allocation. Instead of having annual budgeting committees where departments debate their requests for months,
The old way.
the old way, the DI system models the optimal allocation of capital across every single division based on real-time market performance and predictive returns on investment. It allows for dynamic shifting of that capital mid-quarter.
Wow. No,
Or risk management. It becomes real-time and adaptive instead of periodic. Market entry strategies, they aren't decided in quarterly planning sessions based on static reports anymore. They're constantly being modeled and tested in virtual environments by AI agents.
It's like a constant war game.
It's a constant war game, prompting executives to make moves much faster and with a much higher degree of precision than they ever could before. And supply chain optimization, it moves from a static annual plan to this dynamic, continuous process that's absorbing shocks and rerouting autonomously.
And this ability to handle that dynamic complexity, that's why the AI has to be integral.
That's it. These systems allow the organization to maintain coherence and responsiveness across hundreds of interconnected moving parts all at the same time. Only an integral AI decision intelligence system can maintain that level of granularity and velocity, and that is now the prerequisite for competing in the modern market.
Which feeds directly into that breakneck pace the research describes. If your competitor has successfully implemented an integral DI system, they are simply making better, more optimized decisions faster, more consistently, and at a greater scale than you are.
It's no longer optional.
No, it creates a competitive necessity. You can't afford to wait and see. You have to invest and adapt now to keep up with this forecast velocity of change, specifically with an eye on that 2027 milestone.
You know, the velocity of this change, it forces organizations to mature incredibly quickly in areas they might have ignored before, like governance and data management. The very fact that the shift is forecast to be 50% by 2027 implies something huge.
What's that?
It implies that these complex organizational overhauls, the ones that require rewriting job descriptions and rebuilding data pipelines, are already succeeding at an unprecedented speed among the leading innovators. That's the real sign of the breakneck pace. The organizational structure is finally starting to catch up with the technological capability.
Okay, so given this immense structural shift, this pressure cooker of 50% automation combined with the complexity of decision intelligence, it makes perfect sense why the Gartner Data and Analytics Summit in 2026 is being highlighted as a pivotal event.
Absolutely. This is where leaders are going to get the roadmap. They need to know how to meet this 2027 target without causing complete internal chaos.
This isn't just a conference, is it? It sounds more like an urgent leadership retreat.
That's a good way to put it. It's explicitly designed to equip AI leaders with the practical tools, the knowledge they need to navigate this transition. The focus isn't theory. It's about strategic and practical roadmaps for operationalizing that 50% goal, responsibly and effectively.
And when we synthesize the core objectives for the summit that are detailed in the analysis, we see what can only be called the triple mandate for leaders.
The triple mandate.
Yes. It defines the new executive role. They must adapt, they must innovate, and they must guide teams. We need to spend some serious time on each of these because together they paint a picture of a totally new management paradigm.
Let's start with adapt. This is the foundation. It's the price of entry. Adaptation means accepting the reality of the 50% shift and immediately implementing the necessary technology, the infrastructure, and crucially, those governance frameworks we talked about.
So it's about spending money differently.
It's about restructuring budgets to prioritize AI initiatives, yes, and viewing these investments as foundational capital, not just another operational expense on a spreadsheet.
Adaptation also means defining the new standard operating procedures, right? For example, if your augmented decision-making process says a human has, say, 15 minutes to review an AI-recommended decision before it's executed.
Like a massive bond trade or a critical supplier order?
Exactly.
Yeah.
What are the protocols for that review? The human can't reanalyze the petabytes of data the AI used. They can't. So they have to adapt to a new role, which is verifying the model's integrity and making sure it adheres to the organization's risk tolerance.
You're moving from decision-making to decision validation.
Decision validation, that's it.
And adaptation requires creating a whole new organizational architecture. The lines of reporting have to change. I mean, who does the automated pricing agent report to? How are its KPIs measured?
That's a great question.
Because if that AI agent is judged solely on profitability, it might inadvertently take on excessive risk, which could violate the parameters set by the human C-suite. Adaptation means defining the multi-layered metrics you need to control these autonomous agents.
Okay, so moving beyond adaptation, we hit the much tougher mandate. Innovate.
So this is the hard part.
Yeah. Adaptation is basically doing the old things better or faster. Innovation is using the power unlocked by that 50% shift to create entirely new strategic pathways, new business models that were just impossible or unthinkable before.
Let's use an example to contrast them. A financial services firm that is adapting might use AI to speed up its loan application processing by, say, 40%.
That's a great efficiency gain.
It is, it's good. But an innovating firm uses its new automated decision capability to launch an entirely new, highly customized insurance product, one that dynamically adjusts the premium on a daily basis based on real-time client behavior and external market indicators.
That's a product that couldn't exist before.
Exactly. That product fundamentally changes the market and creates a massive barrier to entry for any competitors who are still running on static annual models. Innovation is about creating an operational moat.
An algorithmic mode.
Yes. The companies that are going to gain that significant competitive edge the research talks about are the ones that prioritize this kind of radical innovation. They're asking the right question. Which is, if our AI agents can handle half of our operational decision load, what truly revolutionary new services or market entries can we now attempt that our human-only decision teams never had the bandwidth or the speed to even consider? This requires executives to think like systems architects, not just business managers.
And finally, we have the most challenging and maybe the most vital mandate of all. Guide teams.
The people part.
The people part. The research stresses that leaders have to shepherd their human capital through these increasingly complex scenarios. This is an admission that this massive structural shift is, at its core, a psychological and a cultural challenge, much more than it is a software implementation issue.
The necessity of guidance is paramount because the core fear is real. The fear is job replacement. The fact that the 2026 summit is focusing on this suggests that managing the human integration, the skill gaps, the resistance, the fear, that's the real bottleneck to meeting the 2027 goal.
So what does guidance look like in practice?
It means proactive, deep reskilling. Leaders have to immediately start transitioning roles. For example, a data analyst today needs to become an AI model auditor tomorrow. Their job is to focus on identifying drift, bias, and unexpected outcomes in the autonomous systems.
And what about that mid-level manager?
A mid-level manager's value shifts from making decisions to becoming an algorithmic boundary setter. They ensure the AI operates within the ethical and regulatory guardrails a company has set. This requires a massive investment in training the workforce to become sophisticated collaborators with and governors of the AI.
It's really about redefining value and creating psychological safety, isn't it?
Yeah.
If an employee sees that 50% of tasks are being automated, their primary existential fear is their own job security. Leaders have to articulate a clear vision of coexistence.
Right.
They have to assure their teams that these AI agents are tools for elevation, not replacement. The human task becomes managing the edge cases, applying creative context, providing the relational judgment that AI still completely lacks.
So how do leaders actually steer their organizations towards a future where AI-driven decision-making is the norm? They need that robust, practical agenda focused on strategy and governance, which is what the summit is designed to deliver.
Right. And we can kind of extrapolate what the crucial strategies on that agenda must be if they're aiming at that 50% goal.
Oh, absolutely.
Yeah.
They have to cover the establishment of robust, quantifiable risk frameworks for automated decisions. That means defining the exact triggers for a human override.
For example,
When an AI pricing model detects a strange anomaly, does it automatically shut down? Or does it execute one more transaction at a slightly deviated price point to test the waters? Defining that risk tolerance is absolutely essential.
they also need governance for the augmented decisions, too.
Yes. To prevent human interference from ruining a perfectly good model, how do you ensure that a single executive's gut feeling doesn't supersede the AI's statistically validated recommendation without a documented, audited justification?
And of course, the governance of that algorithmic capital we talked about.
Making sure the models are clean, compliant, and continuously tested. This entire preparation phase, all of this work, is geared toward hitting that 2027 projection successfully and, maybe more importantly, responsibly.
This intense focus on the triple mandate adapt, innovate, guide. This is what separates the organizations that will control the 50% shift from those that are just going to be crushed by it. The leadership challenge isn't about buying the right software. It's about fundamentally rewriting your organizational architecture and managing a cultural evolution, all under extreme time pressure.
And the organizations that are already prioritizing this, the ones securing these strategies from pivotal events like the 2026 summit, they recognize that this investment is existential. They're not just optimizing, they're securing their company's future operational relevance in a world where decision speed and precision are the only currencies that really matter.
So now we get to the so what for you, the listener.
Yeah.
The ultimate payoff for mastering all this complexity and actually meeting that 2027 goal.
The reward.
The reward. And the promise held out by the analysis is it's unequivocal.
Yeah.
Companies that embrace these changes, that invest in these AI-driven decision processes, they stand to gain a significant competitive edge.
And that phrase, significant competitive edge, we need to quantify that in real business terms. It means everything when half of your operational brain is optimized.
Right.
Imagine a sector where traditional companies are still relying on monthly or quarterly budget reviews, on manual spreadsheet analysis. The company that's operating with 50% AI-driven decisions, they're not just playing the same game better, they're playing a different sport entirely.
Let's break down what that edge actually looks like in practice.
Right.
Let's move beyond just it's faster.
Okay.
It translates directly into superior capital deployment. Because the AI is deciding and acting in real time, you eliminate all that human latency in responding to market signals. Capital deployment, inventory adjustments, resource reallocation, it all becomes frictionless and instantaneous.
It also means a radically improved cost structure, and not just, less waste. It means superior resource utilization because you have this highly refined predictive modeling. The AI knows exactly how much to buy, when to buy it, the optimal price to sell it at.
So you're reducing all those unnecessary inventory buffers, the overallocation of human hours.
Which drives down operating margins across the entire sector for everyone. And crucially, it means superior market responsiveness at scale.
Give me a scenario.
Okay, imagine a sudden, unexpected supply chain shock. A major geopolitical event shuts down a core shipping route. The traditional organization, what do? They initiate an emergency task force. They spend days, maybe weeks, collecting data.
And then they come up with some limited manual plan.
Exactly. The AI-driven organization, the one operating on integrated decision intelligence, has already detected the closure. It has modeled thousands of alternative logistics pathways. It has renegotiated terms with secondary carriers, and it has implemented the most cost-effective solution autonomously, all in minutes.
That's the operational difference that creates the moat.
It is. To use a more sophisticated analogy, imagine an established pharmaceutical company trying to discover a new drug using passive BI. They analyze trial results after the trials are complete.
The old way.
The AI-driven competitor is using active decision intelligence. Their AI is constantly monitoring thousands of active trials around the globe, dynamically adjusting dosages, selecting patient cohorts, and even terminating failing experiments in real time based on probabilistic success modeling.
So they'll get to the breakthrough faster.
Faster, cheaper, and with higher certainty. That iteration speed is the competitive edge.
The difference just becomes astronomical over time. If half of your decisions are optimized, you've essentially eliminated half of the organizational drag that holds companies back.
And the company that lags behind is operating with static settings in a constantly dynamic environment. It's like trying to navigate a maze with a map that's a year old.
This is why the risk of lagging is so severe. If half of all decisions are AI involved by 2027, the gap between the companies that embrace the shift and those who didn't, it's going to widen exponentially.
It's not a linear loss of market share. It's a sudden cliff of competitive irrelevance. Organizations that miss this wave, they risk operational obsolescence within just a few short years because they simply won't be able to match the precision, the speed, and the cost efficiency of their AI-enabled rivals.
And the time to move, as the research just emphatically states, is now. That's why that focus on proactive knowledge acquisition, on getting the strategies from events like the 2026 Summit, is the key to unlocking new potentials.
It's about securing the operational playbook before the game of fully automated decision-making really begins in 2027.
And this brings the whole discussion right back to you, the listener. Understanding this transition, the shift from simple augmentation to integrated decision intelligence, managing your algorithmic capital, and that urgent requirement for leadership to guide their teams, this is essential knowledge.
It is. This is the knowledge you need to navigate the modern business landscape effectively, and it doesn't matter what your current role or expertise is.
Whether you're managing data, leading a product team, or setting corporate strategy at the highest level.
You have to internalize what this 50% projection really means. It means your role is fundamentally about to change. And the quality of your organization's decision architecture, that algorithmic capital, is about to become the single greatest predictor of competitive success or failure.
The competitive edge is no longer about who has the biggest market size.
No. It's about the efficiency and the quality of your strategic choices. By integrating AI as the core of decision intelligence, organizations are making a very powerful bet. They're betting that machines can manage the modern world's complexity better and faster than humans can alone.
And if that bet pays off,
The laggards will be left in the dust.
that feels like a solid landing point for this really intensive analysis. We've defined the urgent timeline, the structural shift, and the leadership mandates required to prepare for this new reality. Hashtag and tag outro. So let's quickly recap the key findings that we've synthesized from our source material analysis today. We confirmed this massive 50% projection by 2027, which involves that crucial balance of augmentation and full automation.
Right, and this is triggering a fundamental shift where AI becomes an integral part of decision intelligence. That's forcing organizations to manage completely new forms of risk and accountability.
And finally, we detailed that intense pressure on AI leaders, that triple mandate. They have to adapt their strategy, innovate their business models, and guide their human teams, starting immediately to avoid competitive collapse.
This isn't just news about technology adoption rates. I mean, this is news about organizational survival, about competitive dominance, and really the redefinition of management itself. The research highlights that the race to harness the power of AI in decision-making is officially on.
And the preparation window is closing fast as we approach that 2027 milestone.
Very fast.
And that leads us to our final provocative thought for you to carry forward. It builds on this necessity of preparation. Since the shift focuses so intensely on governing these automated decision-making systems, the algorithmic capital, the ultimate question for the human leader is no longer, will AI make better decisions?
That question is settled. The truly critical question now is, how will human leadership roles need to evolve when their primary task shifts from making the complex operational and strategic decisions themselves to governing, validating, and ethically setting the parameters for the AI agents that make half of their company's decisions?
So, consider where your organization stands today in relation to that rapidly approaching 2027 milestone. Are you adapting, innovating, and guiding? Or are you waiting to see what happens? That choice, right now, might be the most critical strategic decision your organization makes all year.
Absolutely.
Thank you for diving deep with us. We'll see you next time.